Greetings, wonderful traders. I welcome you in this wonderful video. I'm going to be sharing with you on how to use support and resistance when it comes to trading volatility 75 or other volatility indices. So what you need to understand, what I usually teach when it comes to currencies, it is that when it comes to our support levels or maybe our resistance levels, we have to wait for what I call in transition. You have to wait for in transition. That's what I usually teach when it comes to currencies. But now when it comes to indices, it is a different story. It is a different story because in transitions are a result of psychology. When I'm talking about in transition, I'm talking about something like this, whereby before the market goes up, it delays, or before the market goes down, it delays. So that's in transition, meaning that's where the sellers are handing over the market to the buyers. So when it comes to volatility indices, you need to understand that in transitions, they don't usually take place. So I'm going to be sharing with you simple ways on how to trade with support and resistance. So now here is a very important secret. Firstly, you have to understand the flow of the market. The flow of the market, meaning how the market approaches that key level. For an example, you have a high here, you have a next high, and you connect these two highs, you get this resistance level. So now price approaches this level, it breaches it, and immediately when it breaches it, remember, I always teach that as a resistance or a support is not a straight line, but it is something like a zone. It is something like a zone. So even when the price is still here, it is still considered as in this key level, around this key level. So you can see that as it approaches the key level, you have to note the flow, and once the flow is broken, that's where you need to enter into the opposite direction. For an example, the most common flow breaker, it is an engulfing candlestick. So once you see an engulfing candlestick, that's where you have to enter. For an example, here you have this green one, which was the last one, and then boom, this red candle which engulfed the green one and broke the flow. So that's an engulfing candle, which means now you have to enter, because here transitions don't usually take place. Same thing applies here. You have this downward flow, and then boom, an engulfing candle, then it confirms that you have to enter. So if you don't see an engulfing candle, that's where you have to see or wait for a break of a high or a low, depending on the direction of the trend. For an example, here when price approached this level, there was no engulfing pattern. It paused and it went down, no engulfing pattern here either, and then it went up. That's where you have to wait for a break of this high, and then you enter your buy here. Same thing applies in this price. As it was going up, there was no flow break because this candle, the red candle, didn't engulf the green one. So that's where you wait for a break of this low here, which is somewhere around here, and you press your cells and you are ready to go. So that's how you should go about with support and resistance when it comes to volatility indices. You don't have to wait for in transition. You don't have to wait for all the stuff that you wait for when it comes to currencies. You just have to note for a flow break, and then you enter. Remember, in currencies we wait for pattern breaks, but here we wait for a flow break, a flow which is because of the candles, yet pattern is because of waves. So here we don't consider much the waves, but the waves are a second option, whereby there is no flow break by an engulfing candle. So that's how you should go about with trading support and resistance and volatility indices. So thank you for watching this video. Stay blessed and enjoy your trading.